Hello, with this case study update from the Trade Desk, I'm Jeffrey Beamer. So today we're looking at our Mylan case study. We just did this a few days ago, but the good news is Mylan went pretty sharply in the direction that we anticipated. There really isn't any bad news here, other than if I had to split hairs, is that my analysis was a little off. If you recall, we began our case study back here on the 22nd, and really right out of the gate, Mylan dropped. I anticipated, if you recall from that case study, that we might come down here to support, test it, maybe move down, kind of come up and just meander our way down and around September 13th or 14th, we would get down here to this particular trend line. Well, as you can see, we not only made it down to our trend line, but we did it in 2 days. And that's actually really good news. I wanted to stay with this a little bit to see if it would continue to push through, but it really hasn't. It's paused here at our at our trend line, which is support, and you can see all this congestion back here, which kind of corresponds with it. So it just makes sense that we're going to take our profits right here. Just this is a nice quick hit. Nothing wrong with it. We've actually made a little bit more money than what I anticipated with what I projected if we got down here real quick, and that's all good news. So let's go ahead and take a look at our case study, and let's close it out. So this is our case study. Remember, we sold a call spread, and we bought the Mylan October 50 strike put, and we sold the Mylan October 47.50 put. We took in $1.70, and now the only, I guess there is a little bit more bad news. If you waited any amount of time on this, or if you didn't see this until Tuesday or the following day after our case study, then you missed the trade. But there were some that got in on that Monday, and that's the good news. So we're going to go ahead and close this out. As you can see here, we're up $128. Now, given that the markets are closed here already, we're going to take this through the weekend. We're positive theta, so we'll make a little bit more money on this. And then we're going to close this out on Monday. So when markets open on Monday, we're going to go ahead and put in an order to close this trade. So we're going to buy to close the October 47.50 call and sell to close the Mylan October 50 strike call. I would ask for $1.30, which would kind of correspond to a little bit of theta decay over the weekend, and we'll exit the trade. We'll actually capture a majority of our maximum reward. Remember, our maximum reward was $1.70. If we are able to get $1.30 here, that's going to be over 75% of that maximum reward, and just a very nice return on risk, because remember, our risk is only 80 cents here. So just a very good trade all around, although it was kind of a quick hit. Let's just take a look at implied volatility, and this is what's really interesting. Implied volatility was here when we put the trade on. Notice the spike up with a sudden sharp drop in the stock. It has, with today's action, it did take a little turn downward, but you can see that we're just on the right side of the zero line. Here's the zero line. All this is profit, and this is where we currently are right now. And you can just see if we stayed in this, we would eventually get our maximum reward. But that's not what we're doing here. We're going to take our profits and run. Again, in summary, we're going to take off this trade at $1.30, and that'll be on Monday when markets reopen, and we should be able to exit the trade, and then we will redeploy our capital somewhere else. So that's our case study update for today. I hope you found it of interest. Thanks for listening, and we'll talk to you soon again here on From the Trade Desk.